My name is Grzegorz Galusek. I'm delighted to moderate, especially on this always timely topic, such as smart technology in microfinance. So today's webinar is sponsored by SIPTA. I bet that everyone is familiar with SIPTA by now. It's a technical assistance support program that was designed by the EU. It's actually under InvestEU, the biggest EU investment program ever. And it is managed by the European Investment Bank, implemented by MFC that I happen to be part of, but also by the European Microfinance Network and the Frankfurt School of Finance and Management. And most importantly, it provides free of charge technical assistance. So institutions that are part of this program are entitled to training, consulting, study visits, and other things that will help them grow their capacity. So today we have actually a wonderful opportunity to explore two quite distinct paths towards digital transformation in microfinance. And in the course of this session, we will hear from Vitas Romania, which is a traditional, long-standing, leading MFI in Romania that has successfully, or is in the process of successfully integrating digital solutions into the established operations, and also Novalent from Poland, an innovative fintech that was actually born digital. So I'm pretty sure that their contrasting journeys will give us a lot of good insights and practical tips on how to go about digitalization in microfinance. And completing our panel is Algolytics, whose expertise in providing technological solutions to the financial sector will help us understand the broader technological landscape, solutions and possibilities ahead. There'll be no dry theory here, just real examples of how technology is gradually turning traditional lending on its head and helping microfinance providers work smarter and probably harder too. We will have 1 hour for this webinar. If any of you has any questions, please, as usually, please add them to the chat box. I will try to follow them in the course of the sessions and make sure all of your questions responded to. So let me now introduce our distinguished speakers. A very warm welcome to Christian Jurma, who is the General Director of Vitas Romania. Christian has also been for a long time MFC board member and chair. We also have with us Serhii Demchuk, who is CEO and founder of Novalent, the fintech that I have just mentioned, as well as Piotr Biegun, who is CEO of Algolytics in Poland. So I would like to start perhaps with the traditional MFI journey and how an MFI such as Vitas Romania is going digital. So Christian, over to you. Briefly introduce us to Vitas and explain how technology has helped his institution expand regionally, and then he will talk about the digital innovation that they have introduced. So over to you, Christian.
Thank you, Grzegorz, and welcome everybody to our session. I hope we will do some initial introduction to our solutions, but I look forward to the discussions that we will have towards the end. As Gregor mentioned, I'm the general manager of Vitas Romania since 2009, but I've been working most of my working life experience with this group in Romania mainly, but also Bosnia and Serbia. A few words about us. We have been, actually this year we celebrated 30 years of existence in the Romanian market. We are a regulated non-bank financial institution. We focus solely on businesses, including agriculture. And we are one of the top 5 microfinance institutions in Romania. And we belong to Vitas Group, which owns a few microfinance institutions in Europe and Middle East. And the group has an IT unit which is based in Serbia. We have a branch network that has been in place since after the crisis in 2010, where we have been trying to grow. But over the last years, our aim was to go outside of the geographic scope where we have branch infrastructure and target a nationwide market. And we have done that by implementing 2 solutions. One is the group came with this initiative of building a CRM on top of our core system, which is a customized version of Salesforce, and whereby digital marketing and other using other channels, we are trying to generate leads and then convert them into applications. And on top of the CRM, we added an e-signature platform. Therefore, we can offer our full range of products remotely without having the branch infrastructure in those regions. And this year, we have launched our online lending platform, with which, through digital marketing, we target nationwide clients, and we have a dedicated loan product that we are selling through this platform. And the focus of today's presentation is going to be about this platform. I thought to talk a little bit about the context, and I thought this is, a good checklist for those that would like to embark into this journey. We have had a scoring product since 2012, and I think if you want to go in this journey, you definitely have to have in mind that the best option to start with is through a scoring. Being part of European Union, e-signature is recognized as a official way of signing a document. In case of Romania, we have access to data from various sources, public and private, and you can connect to this data through APIs. We have the Open Banking Directive PSD2, which means that in principle you can get access to the bank account of your clients, and potentially can also automate the disbursement. You have to be able or have a product or have the experience to do unsecured lending in order to have a very lean process. And definitely you bring clients to your platform through digital marketing. And in our case, we have done digital marketing since 2017. On the other hand, what we tried to achieve with this platform, we wanted to expand geographically. We had a clear idea of what is the buyer persona in our case. Usually smaller clients, they have their accounting done by a third-party accounting services. They are always late and not reliable. Usually financial statements always require some adjustments to be able to see what is the real situation in the company. On the other hand, they are not very willing to provide a lot of documentation, nor to share a lot of information. And at the end of the day, everybody wants the money, if possible, in a few minutes after they applied. We have also wanted to achieve economies of scale because in Romania and probably in the region, it's difficult to hire people. The cost of labor is increasing, and skilled people for the kind of lending that we are doing are less and less available. And lastly, even though we had the scoring product in place since 2012, always when we try to calibrate the scoring, because data was still created manually by our staff, we had issues to clean the data and run proper calibration on the scoring. So we tried through the platform to cover some of the pain points that I mentioned. The process is very simple for a client, and the client only needs access to a device with a camera, whether this is a mobile or a desktop device, a browser, and access to internet. They have to have their ID card with them and a bank statement. And we went against the flow. We didn't want them to create an account, but we asked them to provide an email address, and we sent a link for them to resume the process, because they can start the process, they can stop the process, and resume the process by the link they are receiving through the email. There are 5 steps a client should follow. In the first step, obviously they start with selecting an amount and a term, and then this is the only data that they have to provide. They put a tax number, they put their personal identification number, name, email address, and then a phone number. Obviously, they give the initial consents related to GDPR and marketing eventually, and then after this step, we connect to the trade registry database, and we look at whether this person has the legal representation rights. And in case of Romania, this is a bit tricky because the trade registry it says that he or she is a shareholder or an administrator, but it doesn't say whether they can engage the company to take a loan. And we had to develop an algorithm based on which we determine whether they can represent the company or not. Or eventually they have to initiate another process for a second person so that they can jointly eventually sign the contract. The next step is the remote digital identification. This is a standard process in order to get the e-signature. They go through ID, taking a picture of the ID. From that ID through OCR, we extract the data, and we validate whether the person that initially said they are representing the company is actually the one that is behind the process. Then the third step, we validate the phone number, and they sign the consents. In Romania, when we started this process, there was one credit bureau. We have 2 credit bureaus in Romania that required us to have a consent signed electronically or by hand, with wet signature, in order to check the credit bureau. The other credit bureau allowed for a very simple signature, but the National Bank of Romania it does not allow you to check the credit history without a proper consent. Then next step is providing an IBAN and uploading an IBAN. And we didn't opt it for the PSD2 integration at that stage, because at that point, not all the banks have been opening their systems. And we also felt like the target clients are probably less willing to share full access to their bank accounts. But most likely this is the trend, and this is what we are also going to do. We are going to enable getting access to their bank accounts directly. And then the last step, they get the final contract and the schedule by a link. They can consult it, and then through a click they sign it. This is what we have done from day one. Is we integrated the platform, and I'm not going to go again through what the platform does, with our core system, which is called WebAbacus. And the nice thing is that once the client finishes the process, all the data is then pushed into our core system. We also get the documents, like copies of the IDs, the consents, even the contract after the contract is signed. And WebAbacus, our core system, is the one that pushes the decision back to the platform if approved or rejected, and also is the main source for the loan contract generation. And in the middle, there is the decision engine. And you have to keep in mind that this is a working capital lower amount. This loan amount is up to 6,000 euros. We focus mainly on 3 areas. One is the credit history and behavior of the applicant. A second important aspect, at least in our experience, is to look at the group identification and behavior. We have seen cases where sometimes they opened a business, they bankrupt the business, and then they opened another business on the spouse, or maybe on aunt. And here we do different ways to identify the groups. We look at transactions. We look at eventually companies at the same address. And obviously we look in what behavior in terms of court cases or any other transactions that may have harmed other lenders or other stakeholders. And so we pulled the financial indicators, the official financial indicators that exist, that are reported by each entity in Romania. We cross-check this information with the data that we collect through the bank statement. And obviously, we look at the sector activity and how this influences their business. And what we are, the decision is not fully automized, but partially some data comes in a very structured way to be read. And we are trying now to, because when you do scoring, you need to pass certain indicators or certain categorization. And we are trying to use AI to perform such categorization. And especially, what I can say is when you take a bank statement and you have different banks having different formats, you want to extract data in a meaningful way. Or if you take a credit bureau report, eventually you don't just want to know whether they have an exposure and whether they have been in delay. You want to know for how long that exposure existed. Is it in the past month, in the last months? It's 1 year old. Maybe they had exposure, now they don't have exposure. What is the delay, and eventually what is the trend? And AI seems to be a solution for us to categorize the data and categorize it in a standard way so that we don't depend on the operator. The results so far, we started in mid-June, are promising. We have about 1,200 unique clients initiating a session on the platform. We have received around 400 applications. 85% are new clients, and we dispersed about more than 110 loans. So success rate seems to be quite well, 29%. And interesting is that the applicants are usually younger generation, even though we had clients aging, 60 or more, using the platform without any problem. Some lessons learned in our case. What is difficult for sure is to manage multiple providers. You have seen, we are talking about one platform, but behind that one platform, probably there are 5, 6 providers, and coordinating between all of them so that you have one meaningful process is an effort. We took from the beginning, we wanted to have a perfect product, and I think it was good that we have created this integration, and now we have one source of truth, which is our core system, mainly because we have 2 origination systems. If you just have one origination system, this is not an issue, but otherwise we have had clients applying to one platform and applying to the same platform at the same time. And if you have different teams, they have to know that this is happening, and one client applied through different channels. It was important for us to put a dedicated staff, for this project, and not mix with the other channels. I think we initially minimized the importance of the support that the client needs, and even though we didn't plan initially, we have, since we had a call center team, we created a support channel for our client, because sometimes the platform doesn't work as expected, or they are making certain mistakes and the platform doesn't allow them to move to the next stage. And one interesting thing, we thought no account is a good decision, so that you don't have to put maintain tens of accounts with different passwords. And we communicated by email to our clients. We didn't realize that Yahoo, Gmail, since we have sending several emails, as they move through the process, at some point categorized our email as spam. And then we had to add, at least in the key important steps, another way of communicating through an SMS, because otherwise they would get the email to their spam. That's all from my side. I look forward to the discussion. Thank you.
That's a fascinating journey, and I am also personally fascinated how Vitas is becoming a fintech, at least partially, and it will be also interesting to see how you see the future, whether you guys, whether Vitas will become a fully fledged fintech or will remain in a hybrid mode for a while. But maybe let's keep that question for later and move now to Serhi, who will tell us a few things about his MFI, his fintech Novaland that he set up in Poland last year.
Thank you for having me here as well. I'm Sergey Demchuk, CEO and co-founder of Novaland, and I will present what we've done so far in Poland. So we jumped from Romania to Poland, and from well-established company with legacy like Vitas is to Novaland, like a newborn, we can say, like Grzegorz said very nicely, born in fintech. Which is actually true because we are quite young company, even though me and my team, we have background in lending and microfinance for many years. Yeah, and that actually allowed us to create, I believe, successful story of Novaland so far, so which we will present now. Yeah, so just in a few words about Novaland, we started in March 2023. For this period, and we started purely online, so we don't have any branches, we don't have any field visit with the customer at all. Everything that we do in online way, remotely. So I can say that we transform traditional semi-lending into fintech, and later I will show what great from the SME lending we took and what we added as new technologies. Yeah, so what we do, we provide working capital financing. Now we increased the ticket up to 100,000 euro. When we started, it was only 50,000, and the average ticket is 25,000, more or less. We usually give short-term loans up to 12 months. We managed to disburse 7 million euro already, 250 loans from the start. So it's like for the last 14 months. Yeah, we keep quite low default rate, 2.5%, which shows that our credit model is well done, and we managed to become profitable from the very first year. And also about this we can talk a bit later. I'll show what was our secret sauce for that. So I have a team of 10 people, most of them with experience in lending, banking, and technologies. And the process is built the way that we can serve our existing portfolio and even scale it 2-3 times without adding extra employees. Maybe 1-2 more loan officers will allow us to scale portfolio 3 times. And we keep inside the core. For me, core is to acquire the customer, to make credit decision, and to disburse and monitor the customer. And the rest we try to outsource. And about that, we will talk a bit later as well. And how was actually the idea of what's new in Novaland comparing to what I did personally in the past? Because how you can see here, this is how, when I was working back like 20 years ago in ProCredit or working in some other microfinancial institutions. So this is how we actually assess the creditworthiness of the customer. We had to go in field, and many financial institutions, they are still doing this. Yeah, so we have to go, we have to visit, check, talk with the customer on his place, and sometimes to check their copy books with notes, check how many jackets they sell, etc., etc. But the question is, do we still need to do this? And is this the only option nowadays, how to assess the micro business when they don't have, let's say, established financial or accounting statements that allow us to make proper decision? I believe no, because nowadays we have a lot of information online. Each of us, as a private individual or as a company, we leave digital footprints everywhere we enter. And this information is online. So what we need to do is just to find all this information, process, and make decision. And this is our solution based on. So customer register on our portal, give us access. So here is not much new, actually, what Christian mentioned already. But for us, that was it from the very beginning. Let's say this is in our DNA, in the very core of our business, that that's the only process that customer can have with us. So he gives us access with Credit History Bureau. Luckily, Polish Credit History Bureau does not require handwrite signature of the customer. We check, as Piotr yesterday corrected me, around 50 different databases. These, like, many of them are open source data or some data where customer consent is needed. And we also, through open banking, through PSD2, parse transactional data of the customer. So based on these three pillars, we actually build our decision making. And here is coming into collaboration what I think one of our great success, that we decided not to develop, not to create our own IT model, but we made partnership with Algolytics, which is represented by Piotr, who will speak after me and share some his secrets. Yeah, so we on our rules, on our our decision, let's say, weights, created the scoring using the technologies that already were created by Algolytics or developed specifically for our process. That allowed us to score the customer much faster, not to develop it from the scratch for ourselves. And based on all this information collected, we give customer decision, customer approve, agrees with this credit offer or disagrees, sign it online, and we disburse the loan. And we do our best to ensure that customers receive money within 24 hours. Yeah, and in online world, this is possible. Of course, if it comes to collateral, if we need to sign the collateral, then we have to go to notary. This is part that we cannot omit, but everything that can be done online, we are doing online. Yeah. Customer journey for our client is quite easy. So they just register on our portal, as I said. I will probably quickly skip here. You can just see that how few fields he or she needs to fill in. So by tax ID number, all information like this, name of the company, address, etc., is taken from public registers, so no need to enter all this. Of course, we verify mail and phone number of the representative. Representative put his own data. Click, click, click. Loan amount. Then the last step will be to upload, either to connect through open banking to their bank account. So in Poland, actually, which is like what I heard from Christian, I think in Poland, we are more developed in terms of open banking. Most banks are connected to different fintech providers who use Contomatic. So like 95% of bank accounts are covered. So customer can choose here his bank account, give us access, and we can parse the data. Or they can also upload PDF files through this widget, and we receive all the information. Yes, and after that, the application process finished, and we process the loan application. On our side, it's also implemented from the very beginning, nicely done CRM, where we can see all the applications on each stage. And if we see that customer stopped somewhere on some stage, we can call him, we can push him, help him to move further and to process the application. Yeah, now we come to the part that we developed together with Algolytics. This is quite traditional way of presenting data, like we analyzed previously. Loan officer collect all the data, put into Excel, and then present in a credit committee. In our case, that's almost the same, but only machine does it, and not in hours, but in seconds. We collect all the data we need. We put it in a very convenient form where we can actually highlight if we need something. We had separate list of alerts, database checks if we found any bad information. We have also some rules for automatic rejections introduced, etc., etc. And we built such a nice scheme. Piotr also will show later, affiliation of customers. So like also Christian mentioned, that customer can already put into bankruptcy two other companies, and now came with the third one. Yeah, so we can put it also historically, and we can see all those connections of the company, of existing company with other companies. And if it's in red, how you can see here, we may check what was the problem with this company, is there bankruptcy or some bailiffs, etc., etc. So that's also in a very visually convenient form, easy to check. And as you can see, human being by eyes or by hands will take a lot of time to create this, right? And the machine can make it quite easily. And we just need to check alerts and move on. Also, what is done in our system, we build cash flow, and we make our decision on a cash flow based. Yeah, so when we parse the data from bank account, we tag and we build proper, let's say, P&L, but cash flow based. Yeah, so we can see here cleared revenue of the customer. We can see, for example, risk operations like bailiffs. We can see loans, if the customer repays loans or not. We can see that if customer pays salaries or not. So everything that we need, of course, I will not share all details, our know-how, but what is needed for us for decision making, thanks to automatization and all these algorithms, it's easier to check and cross-check, verify, and move to decision making. Yeah, and here's the cooperation results of our work with Algolytics. Here you can see how process changed for us. When we started, actually, first half year of after we start disbursing loans, we did everything manually. Before automatize anything, you need to do several things manually and to do it repeatedly, let's say. And then only if something is repeated again and again, then it's time to automatize, of course. So first cases we did manual, and you can see how much time we spent for each loan application. Anyway, it's much faster than going to the field, picking the customer in his place, but still it was 3 hours for preparation one loan application. Now you can see with automatization, it's much less. And what is more important is the decrease of default rate. Of course, because human factor risk is mitigated. Machine can highlight much more details than a person can do this with just bare eyes. Yeah, so that's the result of our work so far in our collaboration. And I think that's it that I wanted to share. Maybe just a few words about collaboration. What I want to say that, as I said, proudly, maybe too proudly about that Novaland success and secret sauce for our collaboration is that we actually decided not to invest a lot in the beginning into development of our own IT system or scoring system, but to find and partner with proper guys on the market with proper experience and combine our business and our risk assessment experience with their IT and technology experience. And that allows us actually to go live after 4 months of development. And we are pretty happy with the collaboration. And I think in this Q&A session, we can talk about further plans. Yeah, and at this point, I will stop. Thank you very much.
Excellent. Thank you, Sergey. Yes, it's interesting to see this partnership component, and maybe we could discuss it a little bit, just what, how do we decide basically, just when is it better to focus on internal resources, when it makes more sense to enter partnership. But before we do that, I would like to invite Piotr to say a few words about Algolytics, but also about maybe some magic tools. Piotr, over to you.
Yeah, all right. So thank you for that. Thank you for the presentation. So I will talk more about the technology and how we perceive technology in credit scoring. So few words about us. So we offer a data science platform. So as Christian mentioned, they're using decision engine. So part of the platform is decision engine, but not only decision engine, but a full-blown MLOps platform. So you could build different things using machine learning and artificial intelligence. And in our experience, and we work on credit scoring with different types of customers in the last 20 years. So the problems we see on the market right now in SME lending can be changed only by two things besides implementing the technology. First thing is access to data, and another thing is using this data with any kind of machine learning and AI to automate decision making. And the problem, I think, both Sergey and Christian mentioned, is that one of the things you need to have into account is that if every part of your technology it's a simple app which does one thing, and you want to utilize this AI, machine learning, and data to make any change, you spend a lot of time making changes in every part of this service. Yeah, so it's very, very hard to do this. So our recommendation is to build a dedicated scoring platform for your credit risk management, which integrates the data, the modeling, different solutions, that it's interconnected with them through the APIs, because this will give you a power to do interesting things. And we don't have much time to talk about everything that could be built. So our experience is that, and we are building success of our customer, is that we invest in alternative risk assessment methods. And by that, we understand using not everything that's in the scoring process, not everything that is commonly used, but like typical data. So things you mentioned, guys mentioned before me, but also looking for additional informations. And today I will just show you for inspiration things that can be done with public registries. So especially in Poland, we have pretty good access to data developed by our government, but also those data could be they need to be transformed to a way that could be useful in the assessment process, and also things that work for our customers in behavioral biometrics and geoscoring. So basically, the process we do is that you take the application data, you take the company ID, and we always build a system that integrates data from multiple sources and build models, ensemble models. So basically, if we have access to multiple public registries, on top of each registry, there is a separate model used to score the data. And later on, depending on your process, on your concerns, you could extend the scoring with additional information from credit bureaus, from open banking, from internal data, if you have any kind of behavioral data, or data from online processes. Yeah. So when we work with customers like telcos, they sell their products through every type of channel, starting from online, from call center, going through call center, point of sales, and even door to door. So basically, providing one scoring system, it's crucial, to score customers. And you need to adjust the scoring system to the data you are getting. And on top of those data that are integrated, analyzed, you get probability of default, credit limit, rating, and list of warnings Sergey mentioned. So just to show you what is possible in Poland, so basically using only data in public registries, you could do a very efficient credit scoring without need to get additional data in the process. So if you see that someone is not trustworthy already based on the public data, and I'll show you later one registry that is super useful here in Poland. So you could decide that you don't want to engage. Yeah, and in Poland we are using registries like a history of. There is a registry of national register of debtors. And if you look in this registry, and it's not super easy to use, but if you get data, you will see that there is additional information that is not commonly used in the scoring process. Yeah, and those public data in Poland are very efficient. But the issue with that is that every registry is in a different format, and the access to them is very, very painful, especially if you need to do this manually, and you have a lot of applications coming in. And the value of all of those data you're getting is that you could put them in a graph that Serhi mentioned, and most of the companies are building graphs that show you some kind of dependencies, links, yeah, between people and addresses. But what we find useful is to add to the graph all kind of informations you could use. So here we have example of Polish investment fund. It's a government entity, investment entity in Poland. So you could see if you look only on a connections between as shareholders, it's not much. If you add persons, it's getting a little bit complicated. Yeah. So you see all kind of information. You could add contact details like phone, emails, which are visible in public registries, and addresses. So the map is much more complicated. And if you have any kind of alerts Serhi mentioned, you are able to see what's happening in one place. So if you have, like Serhi showed you, information about the transactions, yeah, about the cash flowing between companies, you could visualize those data. And working with this kind of information helps your credit officers to make efficient decisions. Yeah, and also you could look for historical connections. So you are able to see what's changing in the company history. Yeah? So the connection is pretty big. Yeah, and you could go to the specific time of period to see what was happening when it was happening. Yeah. So this is one of the things you could use, be it if you have the right data and the right technology. Another thing that is working, especially in the processes which have a lot of application flowing, is to understand behavior of your applicants, and you could use the data you're using for a marketing to understand if the people on the other side is someone with if on the other side you have a human being or a computer, or if the way the person is using the computer or working on an application process is connected with positive payment history or some kind of negative actions. So basically, you could gather data and build some kind of digital user scoring from touch, using the keyboard, scrolling, sensors, device, and connectivity, and build features on top of that, and influence your decisioning. So basically, you understand what is happening with your user, if there's any kind of connections between different applications. Yeah, because there are patterns of frauds, as Christian mentioned, that someone is closing one company, yeah, and opening another on someone else. In our cases, what we see, someone is applying, they are declined, and they are changing data, but the person who is applying is the same person. Yeah. So basically, things like taping and deleting using clipboard show if you know data, and if you don't know data, it's probably not something you are not the owner of the data. Yeah? So this is the basic information. And if you look on things you could understand and collect on top of each of this type of data, there are separate models that help you to understand if you have if you have a good player on the other side with a behavior that is connected to your to the lower risk or to the higher risk. And you could quickly understand from data you're using to the marketing if someone is a good customer or someone with higher risk profile.
So Piotr, sorry about interrupting. So you trying to say that from the way I tap my keyboard, you can tell whether I cheat or not?
Yes, and it's super effective. Yeah, okay. So it's
amazing.
Yeah, so basically, when we work on with our customers, customers, you could detect fraudsters, because if you have online process, part of the applications you are getting, there are some kind of bots or also people who doesn't have good intentions. Yeah. So this is why this is effective, and it's not thing you take decision on, but it's something that probably later
the factors,
see in data. And the same things we are also working in Poland is geolocation. So using information about the address to predict risk factors, fraud factors, and for individual even income. Yeah. So basically, there is a lot of things depending on the geography. Yeah? It's connected with history, with the way the country is built, and to do this, you need to be able to standardize data, and later on you need to have data to enrich data. And if you have history of your applications, of your customers, it could be dedicated credit scoring. So here we have example of Poland, Gdańsk, and some Świdnica city. It doesn't matter, but it shows how the geography is different. So here in Gdańsk you have port. So your customers probably doesn't live in the port. Yeah, they could do business there, but probably they doesn't live here. And the same history here on the right side, we have old industry region where also people didn't live. So when they provide you with an address like that in the application, it's connected with higher risk. And in Poland, we are always building this kind of stuff. Or basically, if you build this kind of stuff, you need to go very deeply, because every building is different. And if you see, even if it's a bad neighborhood, doesn't mean that every person living in this neighborhood is a bad customer here. So is it effective? Yes. So our experience is that if you do this kind of stuff, for example, for pre-scoring, yeah, for understanding if you want to engage further, invest in the sales, in the marketing activities with specific customers, we see that individuals are very similar to solopreneurs, and the scoring based on others, it's very similar to scorings you could get from credit bureaus, especially for customers which doesn't have any kind of history, yeah? Because this is always an issue, how to score customer without credit history. Yeah? So, and for companies, it's even more efficient. Also, if you're looking for any kind of signs of frauds, yeah. So it's also even more efficient in scoring. And for individual customers, based on the data, you could predict in how much they are earning, or what is the possibility they are earning amount that will give you the ability to repay their loans. Yeah. So that's it for me. It was super quick. So
excellent.
If you have any questions, that's
maybe just a quick question. Just with this geolocation scoring, just whether these things do not border on a bit of irresponsible, what we would call from the microfinance perspective, responsible practices. It reminds me of the practice in the US banks.
Yes.
Were doing this redlining, just they were taking a map and they were marking areas with red lines where they would not venture into with credit because they knew there were poor customers there. So finance was always something that was trying to, just make this good distinction, make a good judgment, just on whether would this not exclude typical microfinance clients?
So that's very good that you are bringing this topic. In States, there was like a lines written on the map. Yeah. So we have this example in Detroit that the people living on the left side of the street are good customers, on the on the right they are bad. So our approach is that the geolocation gives you additional information. It's not it's not a factor that decides about the credit scoring. It's additional information showing you that there's
a higher risk.
Yeah, there could be a higher risk or lower risk. Yeah, the value you're getting is when someone is applying and they don't provide you with a valid address, you know that there is a higher risk. Yeah, so you need to look at this a little bit differently. It's a technique that will give you additional information about the customers and store customers for which you don't have information. Yeah, so it's not. I know that there are a lot of controversies about using this approach in states, but it was just designed badly. And to make this efficient, you need to work on very low level, so the low details. If you have a whole district marked as a bad, you will exclude everyone. But if you know that someone has a good history and living in a bad building, it means, okay, there is higher risk, but other data supporting it that you could invest in this relation.
Okay, super, thanks. We have one question, so let's give it a priority. It's always the most important thing is always to respond to our participants' questions. So there's one to Serhi, but I think we can also ask Christy about it. So Anita from Youth Business International is asking whether Novaland was a new, as Novaland is a new model, where did you get your initial investment and loan capital from? So to Christy, the question would be whether the investment in the lending platform was your internal investment, or do you seek any capital from the outside, any support, additional support? So please go ahead and answer this question.
I can start then. Yeah, for us, actually, we invested, me and my partners, I had two co-founders with myself, and I have actually big experience in microfinance, almost 20 years. So the person who actually invested with me, so I invested my own money. Of course, I wouldn't do it only by myself because it's a capital heavy business, what we're doing, right? But someone who knew me before and also had some money said, okay, I know you did it in the past as a CEO in other companies, let's do something together. Yeah, so that was the beginning. And then later, actually, we found, after 1 year, one year of operations, we found international group. They are more in consumer lending, in leasing. In many countries they're working, and they joined us. So now we have investments from, let's say, institutional investor after 1 year of operations. So we already had attraction, we had something to show, and then we onboarded new investor. Yeah, so that's our story so far.
Okay, so that's clear, fully private initiative. And Chris?
Yeah, in our case, the CRM was the cost of the implementation was driven by our shareholders. As I mentioned, Vidal Group did this not only for us, but for other countries in the group. For the fintech platform, we got some co-funding from EFSE with a cost share on our side. And since we are an established institution with profitable operations, it hasn't been difficult. And in terms of the budget, it's true, we started in 2020, putting the first bits together, that the prices may not be valid now, but the total cost was somewhere below 50,000 euros, let's say.
Yeah. Okay, super. So we almost finished, but I thought we could still maybe explore, if you participants allow us to, extra 5 minutes to explore this question, how much internal and external expertise, and at what stage, just do we seek partnerships, and what makes us enter those partnerships, and whether we're able to profit them. So maybe do you have any thoughts about that? Christy, your approach is more, I think, internal in general, but maybe this will change. Do you have any thoughts about partnerships like the one that you see between?
I mean, our case is also specific that we have an IT unit internal, and this to a certain extent matters. And we if you know, initially it was all about externalizing certain services. I think we kept some internal, at least in those areas where we felt like this is important not to share it with, because this is a competitive advantage.
Sure.
On the other hand, you know, looking at what Piotr does, we would never be able to do this kind of research on our own, because this is not our core business. Our core business is lending. So I think we need to find the right balance between what we keep internal and where we partner. But most important is that you find the right partner that doesn't take your knowledge and then commercially start spreading this.
Exactly. Good. And Serhii and Piotr, any thoughts on that, on the partnerships?
I can say that for us it was easy decision because we, as I said, we didn't have any background. I mean, like in Novaland. So for me, it was obvious decision that I will not do. Even Christian admits that they will not do with their IT team what Algolytics in the short term. So for me, it was very easy decision. For me, it was the most important to find a proper partner. The same. Yeah, and I also had doubts about like sharing my ideas, and that's the question of confidentiality, trust in the partner, which we established, and we will keep developing. And this is not one-time deal, actually. Like we keep developing what we had. We meet with Algolytics and say, hey, let's improve, let's add something new. And actually, we had such a brainstorm session just yesterday and come up with really great insights, which actually, if I did by myself or they did by themselves, we will probably will not come up with this idea. Yeah. So, and I think this is the beauty of synergy and a collaboration. And also about ideas, I think that what I shared from one side, I was worried, maybe I share some secrets. From another side, every one of us who work in microfinance 10, 20 years, they know the same. Come on, I didn't disclose any secret. I just showed how we do it. So I believe there is very good proverb that the idea costs $1, implementation costs $10, and how you sell it costs $100. So I'm for this story. So better to implement something and to use it and to, I don't know, to sell, to promote, etc., than just to keep idea and be worried that someone will steal my idea, because idea costs very little. The most important implementation, yeah. So that's my message regarding this.
And our experience, I think that it should be kept someone in the middle between what Christian and Serhii does, because it's like you need to understand where you are creating value. If your value is in the taking decision and generating leads, this is something you should invest. Yeah, and we are a platform provider. Yeah, so we provide a platform. So if you want to build things we have to run the machine learning models, you will spend a lot of time and you won't be good at it. Yeah, and this time could be invested in developing the processes. Even like a Christian showed, yeah, they built their own process with their own CRM, and for them it makes sense, because this is where they generate value, because they have also other companies in the group. So our experience is that you should always assess where you are good or very good, and keep these core things internally, and the rest could be developed with the partners. And you shouldn't spend money on building infrastructure, especially if you are not a tech company. Yeah, and most of the finance companies, they are not a tech companies. Their value isn't generated from a different use of technology. Yeah, the value is somewhere else. It's experience, it's the processes, is the way they know how to use data, how to take decisions. And in Poland, the competition in terms of technology is very companies are similar. Yeah, the access to the technology, access to the data is the way you are using those data like makes difference. Yeah, this is my opinion in our expertise. Yeah.
Okay, super. Super. I think we've come to the end. This was a really fascinating discussion. Also, as I said for myself, who was brought up in the traditional way of doing microfinance, I can clearly see where microfinance is heading now through you guys' presentation. I would like to ask our participants if they could share the evaluation thoughts through this evaluation questionnaire. I think that we would be very grateful for that. And let me thank you, Christian, Serhii, and Piotr for those great presentations and the wonderful discussion. And thank you for sharing the tricks of your jobs and tricks of your new inventions and your vision for your institutions for the future. Thank you for that. Thank you for sharing that.
Okay.
Thank you.
Thank you.
Thank you.
It's been a
Bye.
pleasure.
Bye.